Okay, so if we look at the stock price alone, you can see that Lemonade is very attractive now if we have a look at the 1 year chart. And the reason for that is, despite having this recent 50% rally over the past month or so, you can see that since our all-time high in January, we're still down about 50%. So this is why I'm continuing to buy the dip. And today I'm going to talk about some of the reasons why I think Lemonade is still an amazing buying opportunity. Hey everyone, welcome back to Underdog Investing. So today I'm going to talk about 3 very simple but very important fundamental reasons why Lemonade is going to destroy and dominate the insurance market in the future. And if they are able to execute and do that, then it's going to be an amazing investment opportunity for the long run. So if that's something you're interested in watching, stay tuned. And if you haven't already, I'll be grateful if you could smash that like button and subscribe to the channel for future updates if you haven't already. Okay, so let's jump straight into it. What are the 3 reasons why Lemonade is going to succeed in the future? Number 1 is market opportunity. Number 2 is data advantage. And number 3 is consumer advantage. So we're going to cover all 3 of these today using this article by the Motley Fool, which is very helpful. So market opportunity, that's the first one. If you imagine Lemonade started in about 2016 and they started with renters insurance and homeowners insurance, then they moved into pet insurance, and then they moved into life insurance, and now they're in car insurance. Now, why is car insurance so important? So if you consider the first 4 that I mentioned, so renters, homeowners, pet and life insurance, all of that added together creates an addressable market of about $100 billion. And that's a lot in and of itself. But if you consider the fact that car insurance alone is a $300 billion market opportunity, that suddenly makes the first 4 sectors look small. And so that's basically a 4x increase in your addressable market just by adding car insurance. So going from $100 billion in addressable market to $400 billion in addressable market. Now, if you imagine a 4x increase in your addressable market, what's going to happen to the revenue? That is going to increase exponentially. Not only is adding car insurance good in terms of just car insurance alone, but it's also going to increase the amount of revenue generated by the other insurance sectors like homeowners, renters, pets and life insurance. And the reason for that is because there's a phenomenon called bundling. People like to buy more than one insurance product from the same provider. So you're going to have new customers who go into Lemonade car insurance, and then when they go into Lemonade car insurance, they're also going to buy things like renters, homeowners, pet and life insurance as well. So you're going to increase the revenue overall in the other sectors as well as the car insurance sector. So that's market opportunity. The second one is data advantage. So as you may know, artificial intelligence is going to be the future of any successful company, and Lemonade are taking advantage of this. So as Kathy Wood always says, the companies with the most data as well as the highest quality data are the ones that are going to win. And that's exactly what Lemonade are doing. They're collecting more than 100 times more data than other old insurance companies when it comes to giving out policies. And why is this important? Basically, insurance, if you boil it down to the fundamentals, it's all about balancing risk. And if you're able to collect more data and higher quality data, then you're able to reduce the risk, meaning that you're able to reduce the loss ratio, so the amount you lose in terms of paying out claims. And if you have a look here, this just demonstrates how good Lemonade are in terms of reducing their loss ratio. So they started in 2016. By 2018, their loss ratio was about 113%. Then it got to about 79% in 2019, and then 71% in 2020. Now, it might look like it's slowing down drastically, but when you get to a lower loss ratio, every percent becomes exponentially harder to lose. So actually going from 113% to 79% loss ratio is easier than going from 79% to 71%. So that's actually a bigger jump in terms of how hard it is to lower the ratio from those levels. And if you compare it with other insurance companies, in fact, the top 20 insurance companies in terms of property and casualty, you can see they've got an average loss ratio of 72% in the recent years, whereas Lemonade, after existing for around 5-6 years, they've already got a loss ratio better than the top 20 insurance companies, on average, so 71%. So that just demonstrates how amazing the data advantage is. In such a short period, they've already beaten other successful insurance companies. Okay, so the final one is consumer advantage. Now, nowadays you've got millennials, younger people, we're all about user experience. Lemonade don't have these old insurance staff who take a long time. They're not very good at basically putting out policies. They've got an amazing user-friendly website in which you're able to get an insurance policy in about 2 minutes. And not only that, when you make a claim, some claims have actually taken less than 3 seconds to pay out. That will never happen without using this user interface that they've got, and also using AI. So in terms of consumer advantage, you've got a massive advantage, because if you're able to purchase a policy within 2 minutes and make a claim within 3 seconds, people are going to go and use you. And I mean, the evidence speaks for itself. If you have a look here, Lemonade hit 1 million customers in 2020. There's only one reason why they're able to do that. It's because they're better than the other insurance companies. So 1 million customers in just over 4 years, that's crazy. If you compare that with Allstate and State Farm, who are basically these behemoth giant insurance companies that have been around for ages and ages, they took 19 years and 22 years respectively to reach 1 million customers, whereas Lemonade took just over 4 years. So that just shows you how that consumer advantage, that AI is really separating them in terms of the type of company they are, and Lemonade is going to destroy them. That's what I think anyway. Look at the gross profit. So in 2018 in total, the gross profit for Lemonade was $3.1 million for that year. And then in Q1 of 2021, so fast forward 3 years later, in just one quarter of 2021, they had a gross profit of $22.1 million. And that is despite the Black Swan event of the Texas freeze, which cost them a lot of money. So despite that Black Swan event, in just one quarter, they're able to almost make about 10 times more profit than they were able to make in 2018 in total, and that's almost a 10x. So that just shows how quickly Lemonade are growing, and there's only one reason for that. Well, actually 3 reasons. The 3 reasons is because of market opportunity, a data advantage, and also consumer advantage. And I mean, this is pretty much what I wanted to tell you. The things that I tell you might sound a bit repetitive, but the reason for that is because these are the things that are going to make Lemonade successful. There's no point in me trying to find other types of information which is new and fancy. I mean, it's all about the basics when it comes to investing, and this is why I believe Lemonade is going to succeed in the future, and that's why I'm continuing to buy the dip. And yeah, I've held Lemonade for a much longer period, in terms of probably from the $80 level. Actually, I've been buying the dip. I've ridden this wave. I didn't sell any when it reached the all-time high. It's come back down. Some people might get a bit sad, but ultimately we're talking about investing in a company that's going to do well in the future. That's why I'm not sad about that. If anything, I see this as a buying opportunity, because I know that in the future, even buying at all-time highs, I think that it's going to go a lot higher than $180 in the future. That's why I'm planning to hold my shares for the long term. So that's the end of the video. If you enjoyed it, please smash that like button and subscribe to the channel for future updates. I'd love to hear your thoughts in the comment section down below. Do you think Lemonade is going to succeed and dominate the insurance market and the industry? Let me know. Do you hold any of the shares? Are you planning to buy any or sell any? I'd love to hear that. And also, if you found it useful in any way, please share this with your friends. And thank you so much. I will see you in the next one. Take care. Bye.